what this mechanism does is just create epic distortions across the spectrum of asset classes. And unfortunately, you see not only the price suppression here of gold and silver continue to play out despite hitting record highs. And we again, this is nothing. This isn't even the opening salvos as to where we're eventually going. But I believe we're going to see a Dow gold ratio of 1 to 1, meaning $8,000 gold at a minimum. It could be more than that, and an 8,000 Dow, and then we could potentially get a 10 to 1 gold silver ratio. So we're talking about $800. So if we get about 80, I mean, we could all. I think this is, it's that's going to happen. There's no doubt about it. Then 140, then 260. Then I mean, there's no doubt. The system is unraveling.
With the ratio now declining from above 100 toward historical support levels, silver is likely to outperform gold in the coming years. The key hurdle for silver is $50, and moving above that level will push it into a parabolic surge. Silver's 2020 surge, when prices surged 140% after breaking $35, offers a blueprint for today's scenario. That rally was fueled by Fed rate cuts, stimulus spending, and a gold-silver ratio near 100, all parallels to the current environment. Gregory Mannarino is a well-known figure in the world of finance and trading, often referred to as the Robin Hood of Wall Street. In this video, Gregory Mannarino reaffirms his strong belief that silver is the most undervalued asset and calls it his favorite of all time. He forecasts gold reaching $8,000 and silver hitting $800 based on a 1-to-1 Dow-to-Gold and 10-to-1 Dow-to-Silver 1 gold-to-silver ratio. He expects silver to outperform gold in the next major bull market, as it did in the 1970s. Gold remains historically undervalued relative to U.S. equities when viewed through the lens of the gold-to-Dow Jones ratio. World Gold Council data shows this ratio remains well below historical peaks, suggesting the precious metals bull market may still be in its early stages rather than approaching a peak. Based on ongoing trends, Mannarino highlights that the COMEX is manipulated through paper contracts rather than real metal. He warns that the system could collapse if a major contract is ever settled in physical gold or silver. Given this context, the key factor driving current price rises is no longer paper, but the imbalance between physical supply and demand. Short selling, historically dominant, is now only a secondary factor for the time being. What's driving the market today is the growing appetite for physical silver in the face of constrained supply. Asia continues to buy aggressively, while the United States is trying to contain prices. Before we dive into Gregory Mannarino's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Silver's the place to be. It's my favorite asset of all time. There's no doubt about it. Everyone knows it. I've been talking about it for over 10 years. We haven't seen anything with regard to the price action of silver based in any currency right now, as far as I'm concerned. Again, look, how I imagine this here is, okay, we understand what's happening all over the world. We have central banks have gone wild. They're not going to stop, especially here in the United States. We've never seen anything like this in the history of this nation. We're going to see currency debasement, devaluation on an epic scale, more so than we can imagine here moving forward here. The United States is it's done, and that's a real reason, or one of the real reasons why we're seeing the price action of precious metals rise along with Bitcoin, cryptos as well. The world is realizing that the United States is in a lot of trouble, and we're starting to see metals wake up. But the deal is, it's the CRIMAX. I call it the CRIMAX. The COMEX here. They don't trade in real assets. Obviously, this is it's a paper derivatives market. Leveraged to the beyond your eyeballs. They don't trade in real assets. Most people have no idea, but that's really what's going on. Until that rigging stops, unfortunately, we're going to see the price of gold and silver remains somewhat shackled. What's going to bring this whole thing down apart at the COMEX or the CRIMAX, however you want to look at it here, is just when one, let's say, large contract is settled in the hard asset as opposed to whatever currency it is, or the dollar, most likely this what they're going to settle in here. Once just one does that, the whole thing will unravel. It's a crime. The NYMEX, the COMEX, these are crime syndicates of the highest order. It really is a crime in progress every day. You've got regulators turning the blind eye to all this, and until that stops, again, the only way, look, it's the regulators aren't going to be the ones that put this to a stop. It's going to really have to be a moment where there is a demand for the physical asset. It's only a matter of time, in my view, and then we're going to see these institutions, the Crimex and the NYMEX, collapse. And I mean, this is all going to play together. How it's too easy for what I do. My job is very easy. I just look at the most likely places, cash, how it's going to move through the market. It's really not a hard thing to predict. We have decades and decades and decades of data to look at. So if we realize that cash moves through the markets and the economies of the world at a predictable pace for the most part, and in a way, if we realize these things, it's too simple to understand where this eventually will go. These are real things. They are hard assets. The world doesn't want this paper illusion anymore. It's frankly sick of it. And people are waking up to what's happening here at the Crimex and the NYMEX and all this other stuff again. So look, with regard to the price action of these things, this is how it's going to play out. There's no doubt in my mind whatsoever. With regard to the gold-Dow ratio, we're going to hit a 1-to-1. We have to determine where the bottom of the Dow is. I think it's going to bottom out somewhere around 8,000. The world stock markets are beyond la land. We have this mechanism here right now with this big, fat, ugly, beautiful, disgusting abomination of a bill. What's it going to do? Vast debt expansion, the same thing happening around the world. What's that going to do to the world markets? The stock markets of the world are going to now trade on a higher multiples expansion cycle. I've been telling people this for 1,000 years. Cash moves out of places where it should be going into and into places it has no business going. So what this mechanism does is just create epic distortions across the spectrum of asset classes. And unfortunately, you see not only the price suppression here of gold and silver continue to play out despite hitting record highs. And this is nothing. This isn't even the opening salvos as to where we're eventually going. But I believe we're going to see a Dow gold ratio of 1-to-1, meaning $8,000 gold at a minimum. It could be more than that, and an 8,000 Dow, and then we could potentially get a 10-to-1 gold silver ratio. So we're talking about $800. So if we get about 80, I mean, we could all. I think this is, it's that's going to happen. There's no doubt about it. Then 140, then 260. Then there's no doubt. The system is unraveling. People think there is some kind of stability. I don't care where you live in the world. Okay, I can tell people here, being that I am a resident slave of the United States. This is coming down. It's unraveling very, very rapidly. People need to be holding. I'm preaching to the choir, to both of you guys and everyone else who follows your work. They know this is where they need to be. I don't personally even think about the short action price movement of gold or silver at all, or even commodities overall, because we're going to see a surge in the price of commodities pretty much across the board. I happen to believe that gold and especially silver are massively undervalued based on ballooning global debt and everything else that's going on. And again, the Crimex and the NYMEX and everything else that's going on with commodities across the board. So yeah, sure, $80 sounds reasonable to me. But the bigger picture is, I'm a macro guy. That's really what I look at. And the macro picture tells me, though we haven't seen anything yet. In the bigger picture here, being a macro analyst guy, I don't think we're going to see something we've never seen before.
Right.
I really believe this. Although we have seen, it's pretty rare, a Dow par gold, 15-to-1, gold ratio. Absolutely, I believe will happen. And I think in an extreme situation, it could go to 10-to-1. There's no doubt in my mind whatsoever that silver is going to outperform on the grandest of scales.
Yeah.
You also have to understand that people who are used to it is the silver is volatile. It's much more, gold very stable. Silver trading price action is it's volatile. So that scares people a lot of times. You see some pretty profound. When you got the Crimex here dumping paper contracts onto the market, you can see some pretty substantial drops in both gold and silver. But silver is always the one that I think rattles people. But in my perspective, and from from everything I look at for as far back as you want to go, I've never ever once swayed from saying that I believe that silver is the most undervalued asset, and I think people should load up on it. Load, 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 load. At least this is these are escape hatches from the financial Armageddon that we're in. I mean, people ask, where is it? It's everywhere. People can't survive. Middle class wipe out. Small business here in the United States can't survive. You got President Trump here doesn't know which way he's going one day or the other. Again with this whole taco trade thing, something I said wouldn't happen, it actually did again. I can't believe it today with China, with the whole chip sector now getting goosed. You can't make this stuff up, but this is what's happening.
In his outlook, Gregory Mannarino warns that the global financial system is designed to enslave people through debt, stripping them of sovereignty. He urges individuals to become their central bank by holding hard assets, such as gold and silver. As central banks and elites prepare for a financial reset, he says only action, not hope, can protect the masses from collapse. In the long term, however, the fundamentals of a bullish supercycle remain intact. The transition to a new monetary architecture, the diversification of institutional portfolios, the structural increase in global money supply, and the loss of credibility of sovereign debt. Estimates based on shadow gold price models or inflation or stagflation projections suggest a target of between $4,800 base scenario and up to $8,900 per ounce by the end of the decade. Beyond gold itself, the bull cycle is spreading to peripheral assets, silver, mining stocks, and strategic commodities. Historically, these asset classes outperform gold at the end of the cycle, offering additional return potential for holders of a well-diversified portfolio. While gold is a good natural diversifier for traditional equity and bond portfolios, a basket of well-selected commodities will better absorb inflation shocks. Furthermore, Mannarino believes that higher rates and a strong currency, combined with prudent debt management, can foster genuine prosperity. To maintain sovereignty, he advises people to hold minimal fiat currency and shift into gold and silver. Let's get back to the interview.
I've been telling people for over 10 years to, of course, as we've heard from other people who also understand, to bet against the debt. Become your own central bank. Do what they do, not what they say. They don't want you, any of us, in an alternative to what they are forcing us to work for. I mean, people don't even understand the basic premise of how the system works. That is, okay, wherever you live in the world, you go out to work every day, and all you do is work for the privilege to borrow that currency into existence. And then you don't even own it. It's owned by the issuing central bank, plus interest they create out of nothing. That's why they don't pay us in gold and or silver, because these would make us sovereign. Say, we can't be sovereign. We must be slaves to the system. That's all they want out of us. Compliant slaves that they can yank the chain wherever they want to. But absolutely, look, the central banks are doing this. The richest people in the world are doing this. All the investment banks, they got the richest clients all set up. Everybody knows where this is going. And thanks to shows like yours, and I would like to say, hopefully, thanks to shows like mine as well, we're getting the word out, and people understand that they must act. They can't sit back. Look, this is beautiful. The three of us can sit here and talk and talk and talk, but until these people take action, they've done nothing. In fact, they're stepping backwards. We want them to step forward and realize that they must act, because no government in this world has their best interest in mind. People, it's an interesting concept too, going talking about all this stuff here. People, does anyone believe that a central bank has our best interest in mind? Of course they don't here. They have a product to sell, to make us work for. They don't even sell it to us. It's not even ours. These dollars or whatever you might hold in your pocket. Again, they're just IOUs. They're units of debt. They're not units of wealth. They're unbacked liabilities being dispersed by bankrupt governments around the world. I mean, what kind of an asset is that? What kind of a person would want to hold an asset like that, unless, of course, you've been taught that this is the way to go because you live in a nation called dystopia. It just doesn't work. And again, it's just so important to realize that people, look, man, you got to do everything in your power right now to survive what's happening here. Not just, look, man, there are people, if you're 1% and 2%ers that are thriving in this environment, and that's what it's designed to do. What's happening here? Governments colluding with their respective central banks is just a wealth transfer effect, a wealth transfer from one group of people, which is the masses, and in the economies of the world themselves, and just pushing it right up to the 1% and 2%. That's all that's going on. It's called the Cantillon effect. I'm sure you guys are familiar with it. This is why we're hearing about currency devaluation, why we're hearing from the president of the United States and his cohort on the side, I call him Damian Thorne, that we need a weaker dollar. The dollar's already lost 94% of its purchasing power. And then the people here, like maybe you guys don't even know, maybe you do. The people here in the United States have been so dumbed down that they believe that they're told by the sitting president that if we kill your dollar more, if we make it harder for you, that all of a sudden the world is going to want our products. Let's say the dollar has 4% of its purchasing power. Let us just take another 2. Then all of a sudden the world is going to want U.S. products, and we're going to become, the economic engine of the world. You can't make it up. Our factories are dying here on the back of currency devaluation. People can't consume. If people can't consume, what's going to happen? Factories don't produce. This is economics 101, people. But again, that's what's happened to the people in the United States. I don't know about what you guys, but maybe it's the same situation. I hope not. I hope that people, at least in one part of the world, maybe where you guys are smarter than they are here. Because here, this is something that's yet to be defined on the level of, on the IQ scale. We're nothing. We are nothing. We are a means to an end, and that's all. The elites here, the people that run the central banks, the people you were just talking about, they realize that the system is dying. They don't want you in gold. They don't want you in silver. They want to keep you in their slave system, period, the freaking end here. That is why they are collectively taking whatever they can get right now out of a system that is being erased right out of the economy, right out of the middle class, wherever you live around the world here. The people on the lower rung, they're done. They've already been sucked dry. We're seeing more people fall to the lower rung, and I said this would happen from over 10 years ago. The prior middle class people who have now done everything in their power, which is happening by you too, to maintain the illusion of a middle class existence, which means borrow and borrow and borrow until they can't borrow anymore. Then, of course, they end up on it. It's just, like sitting on the front row of a roller coaster into the pit of despair. That's all it is. And there's no way on this earth or off this earth or anyplace else that these $1 million earners here can connect with the regular guy or the regular girl and realize what they're going through in any way, shape, or form, nor do they care at all. There is no care. They've disconnected themselves from it. There's no empathy. There's no humanity anymore. It's a system run by devils. I call it devilism, period, the end. And it's only going to get worse. And what would happen? We would go from a debt-based system to a wealth-based system. And you see, the wealth-based system would allow the people to prosper, like you just said, but they can't. They were creating a slave planet. I mean, look, man, I want people to just research what I'm about to say. In times without even having a gold standard, okay? In times of higher rates, we have our president here talking about lower rates. We need lower rates. We need lower rates here. That's not what brings back prosperity. What brings back prosperity is higher rates. And again, in economics and finance, what do we know? We know that to have a strong economy, you need a strong currency. To have a strong currency would be great if we had a gold-backed currency. You're not going to get it, because that would, again, return power to the people instead of the bankers. So what they would do, if we raised rates here, purchasing power would increase and people would thrive. But that can't happen. We have to be dissolved. The people must be erased. They must be told a tale by someone they respect, some people love. Like, for example, our current president here, who has no idea, or any world leader. Again, they're all puppets. They all take their orders. It's the puppeteers are the ones telling them what to do, what to say, what script to follow here. But imagine if we had just one real world leader of a developed nation who actually came out and said, listen, man, we got this all backwards, because that's really the truth. It's backwards. We need to fix it. We need to build this from the bottom up. It ain't going to happen. The bottom is being erased, unfortunately. But people have an opportunity here to turn it around and make the system work for them, get out of fiat, keep only what you need in the bank, and that's it, just to transact in, unfortunately, their system. The rest of it, look, man, it's a no-brainer. You know what I'm going to say? And you guys are on top of it more than I am. It's get yourself gold, get yourself silver, and become sovereign. These make you sovereign. How else can I say this to people? I don't know another way. Again, you guys, I'm sure, know it a lot better than me. I'm preaching to the choir. But people that are listening, this is how you do it. Period. Listen to these guys. Don't listen to me. I'm just a guy on YouTube.
Warren Buffett saw silver as an undervalued asset during a time when its price had dropped. He believed that the low price presented a strategic buying opportunity and thus decided to make a considerable purchase. Meanwhile, analysts at Citi and Markets.com are particularly bullish, citing factors like tightening physical supplies and growing investment demand. ABC Bullion's June 2025 monthly market update shows a chart of the gold-silver ratio over time, with the current ratio of 91 still above the long-term historical median of approximately 60 to 65, suggesting silver may still be undervalued relative to gold from a historical perspective. Following significant developments, many investors may wonder whether silver will continue to outperform gold for the remainder of 2025. Well, that's obviously a difficult question to answer, as commodity markets are very difficult to make predictions on. Silver typically outperforms gold in the later stages of precious metals bull markets due to its smaller market size and industrial demand components. The current silver-gold ratio remains elevated by historical standards, suggesting significant potential for silver to outperform as the bull market matures. Silver demonstrated remarkable strength in June 2025, recording an impressive 8.8% price increase for the month. This strong upward movement brought silver prices to just under $36 per troy ounce by month end, significantly outpacing gold's more modest 0.3% gain during the same period. Historical data shows silver's volatility is approximately 1.5x to 2x that of gold, creating both higher risk and potential return. During the 2011 bull market peak, silver outperformed gold by nearly 3 to 1 from the 2008 bottom. Gold appears poised for a steady climb, while silver may offer faster and more aggressive returns. Investors should closely monitor these patterns as both metals move into their next major cycle. If silver breaks above $50 and enters a parabolic phase, are you positioned to benefit from upcoming moves? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.